Spring wheat, mostly higher as well. Oliver Slopes with Blue Line Futures in Chicago. And Oliver, again, wheat kind of stuck in the mud, but kind of the interesting story here has been corn after that move higher and then a pullback.
Yeah, corn has shown some great strength really over the last couple of weeks since last month's WASDE report. We're about a month out from that. We've got a WASDE report here this Friday, so maybe some positioning as we go into that. But since last month's report, we have made a series of higher lows and higher highs, so that continues to be very constructive. The first line in the sand for support that we want to keep a close eye on is 414 and a quarter. That represents last week's low as well as the 50-day moving average. A failure there, and you probably have a little bit more significant support down near 408 to 409, which is trendline support from those contract lows as well as the 20-day moving average. So I think that we can continue to mark those higher lows and higher highs. So at today's correction, a couple cents lower to start the week, I think healthy in nature. Really see this market accelerate to the upside. Need to get out above 425 to 430.
Let's look over at the bean complex here as well. We bring up the 6-month chart. Lots of peaks, lots of valleys.
And that is right in line with the seasonals. It is very, very choppy this time of year historically, and this year it seems to be really no different. And we're kind of at an inflection point when talking about seasonality as well as price points as well. We're at a make or break time for a lot of producers out there to finish this crop off the way that they want to. I know that some areas have had less than ideal weather here recently, and some maybe a little bit more ideal. So again, that leads to the choppiness that we see seasonally, and this year is really no different there. Big support pocket to keep a close eye on, 1020 to 1025. A break and close below there, and there's some error on the chart to take us back towards where we really started breaking out last month following the WASDE report. So a big week for the soybean market. I wouldn't be surprised to see us make or break one way or the other from here.
And we'll kind of wrap it up with wheat here, moving higher. Chicago, Kansas City up a nickel. This has been stuck in the mud. What's happening?
Wheat has been very, I would say disappointing, but it really hasn't, been catastrophic to the downside, especially looking at the Chicago contract. If you kind of zoom out and look over the last month, we've been just kind of treading water here sideways to a little bit lower. When I first started in the industry, one of the things I first learned was never short a quiet market. And this has been a quiet market. When you look at the risk-reward perspective, I think there's probably more reward to the upside than risk to the downside at this point, knock on wood. So hopefully we can kind of see this strength today continue through the rest of the week. For that December Chicago contract, really need to see consecutive closes out above 530 to 535 to maybe spur some more excitement and potentially short covering from funds.
All right. Hey, Oliver, hang on just a moment. Can't wait to get your insight on livestock markets. That's coming up right around the break. This is Market Day Report. Oliver Slope, Blue Line Futures. Okay. What are your thoughts here after that week of losses for the cattle market as we come into this week?
I mean, all in all, I think it's healthy, probably a bit overdue. Last week was the first weekly lower close for live cattle since June 16th, and for feeder cattle, pretty similar. So I think a pullback and a little bit of a pause is healthy as we kind of continue to consolidate to start the week, looking for maybe new news to give the market new direction. There's a lot of trendline support near 234.05 in the October live cattle that also kind of coincides with the 20-day moving average. So a big technical level to keep an eye on to start the week. And the same for feeder cattle. We got the 20-day moving average kind of right where we are this morning as well. So at an inflection point, I think what is interesting, as you noted, is the fact that on the flip side, we've got lean hogs firming. And I think some of that could be potential demand coming into the pork market with the high prices that we're seeing in beef. So lean hogs potentially have a little bit more juice in the melon here to squeeze out. If we continue to see these beef prices remain high, they could pick up a little bit more demand.
And the next question is this a safe haven market or something different? Talking about precious metals, gold market, all-time highs again today.
Gold market just continues to rip to the upside, posting consistent gains, which is good to see. Probably a little bit overbought here in the near term, but any pullbacks that we've seen in this market really over the last year and a half continue to be bought up. And I know you and I have talked about this many times in the past. A lot of the buying really started from central banks entering the market, and they're not looking at trading this market in and out on a daily or weekly basis. They're looking out on the longer term basis. So that's, I think, going to keep some demand underpinned in this market, and we can continue to work to the upside. Silver is starting to wake up finally, playing a little bit of catch up over the last week and a half, trading to the highest level since 2011. So the trend is your friend, and for now, that is up and to the right in the precious metals.
Always great. Oliver Slope is with Blue Line Futures in Chicago. Okay.